You are back with us on America's Forum. I'm J.D. Hayworth.
And I'm John Bachman. J.D., this next segment makes you think about one of my favorite movies, Glenn Ross. Do you know what it takes to sell real estate? Don't answer that question.
I had my whole theory here, but not in terms of that particular work of art.
Yeah, we'll save it for after the show, but check out the movie if you want to know what I'm talking about. Well, according to a new Gallup poll right now, most Americans actually believe that real estate is the best long-term investment available. The Economy and Personal Finances poll asked Americans to choose the best option for long-term investments. They were given choices: real estate, stock, mutual funds, golds, savings accounts, CDs, or bonds. Previous surveys had gold as the most favored choice, but as you can see here from what we're showing you on the screen, that has changed. Gold now ties with stocks and mutual funds, with 24% of Americans believing them both to be the best option for investment. 2014 has seen the housing market improve steadily across the United States, and home prices have been rising after a steep drop in 2007 during the subprime mortgage crisis. This current improvement in prices may be why more Americans are now considering real estate as the best option for long-term investors.
And we are joined now by the CEO of McCabe Research and Consulting, Jack McCabe. Jack, it is good to have you back with us on America's Forum.
Thank you, JD. Good seeing you guys again.
Great to see you, Jack.
Now, Jack, do the polls results surprise you?
They do a little bit because we're only 5 years removed from one of the most historic real estate crashes that we've seen since the Great Depression. So they do a little bit, but I think they really mirror the sampling of the survey that Gallup took. And it was a little over 1,000 people, and they spread it across different age ranges and incomes. Generally what you find is older, more affluent Americans believe that real estate is the way to go. Younger Americans that are not reaching their stages of affluency yet believe that savings, CDs, and more hard type currency is the way to go. I think a lot of that has to do with many older Americans have built wealth through the years by home ownership, and normally we have about 2/3 of the population that owns a home and about 1/3 that rent, and that's actually changing right now. But they've built wealth, and it's been kind of a forced savings for them. Doesn't amount to much. Usually it's about 3 or 4% a year. But after 10, 15, 20 years, they built up a nice nest egg that they can use for retirement, vacations, college educations, and so forth. But over the last 5 years, we've seen a lot of nest eggs were wiped out in the real estate downfall. Now we're back up where many markets are being pumped up, I believe artificially, by hedge fund purchases in these different areas. We've seen increases of 20 to 37% in real estate values in the last year. Now, there isn't any investment opportunity I know of that's legal that has returned those kind of appreciation figures.
Well, Jack, as I heard about it, you might imagine serving in Congress, I'd have occasion to sit down with people in property management or developers, and they said, yeah, real estate is the place to be because the good Lord only made a finite portion of land. They're not making any more here on this earth. Is the abiding allure of real estate that tangibility?
Well, I think you're talking about limited supply and increasing demand. Now, if you're somewhere like South Florida or Southern California, without a doubt, the barriers to building new homes are impossible, really. You're just doing infill locations. You'd have a hard time convincing people in Iowa and North Dakota that they're running out of land. So I think that it depends on the marketplace, it depends on the desirability, where's the population moving, where are they creating jobs, and what's the most affordable. That usually defines where your best housing markets are.
And you mentioned, if memory serves, North Dakota, where now the energy boom and everyone coming into the state, there is a most definite housing shortage in that state well, so much is going on right there.
Well, it's incredible. People are moving for jobs because in many locations around the country, despite what government figures show, it's still very difficult getting a good paying job. And so they're moving all over. Now, that could actually be one of the pitfalls of home ownership, as we've seen here in Florida where we're located, in that we didn't have job creation down here, but there were a lot of jobs being created in Texas. But homeowners here in Florida could not move to Texas for those jobs because they couldn't sell their homes during the downturn. So I think mobility is another reason why young people don't see home ownership as the greatest thing. They know that in this day and age, you may have to move to get a good paying job.
Now, should we be concerned? One of the things that's maybe holding back the economy a little bit right now is that equity in people's homes has not returned to the level that they were accustomed to prior to 2007. And you could make the argument here, Jack, that there was too much wealth in housing leading up to the housing crash. You think about diversifying your portfolio. Do Americans need to be concerned about maybe spreading their nest egg around a little bit more?
Absolutely, and I think when you talk to most very successful investors, they'll tell you don't ever put all your eggs in one basket. You spread them around, you diversify. Real estate should definitely be part of your investment portfolio, but you shouldn't put all your money into just real estate, because if we have a downturn, prices drop 30 to 50%, and you can't unload your assets, you're in a world of hurt. So I think right now it makes great sense to have real estate in your portfolio. It might even be a little real estate heavy right now with the returns that we're seeing from different investment classes.
Jack, in just about every economic endeavor, we talk about cycles of boom and bust. We might add the third B, especially to real estate, the bubble. Are we replicating the past? Could we see, especially with the investments right now that we've talked about in the past, is there a danger of a bubble-type circumstance reemerging?
Yeah, it's a hot topic for debate right now, and analysts are very split on it. I personally believe that, yes, there is danger of a bubble, not a national bubble at this point, but definitely those sand states, the southern states where we saw the greatest rise in artificial appreciation, and then the rocket came crashing back to earth. We saw 50 and 60% drops in prices. California, I think, definitely is getting into that bubble territory now with the gains they've seen out there. Florida, you can make a case where we've seen 21 to 28% increases in real estate values here in the last year, maybe approaching that sometime soon. Las Vegas and Phoenix, other areas with the large double-digit, very abnormal type gains in real estate values. We may be looking at bubble territory, not in the next few days or even the next few years, but 3 or 4 years from now, we could be in trouble again.
Oh, it brings a whole new meaning to the term bubble bath. None of us want to take a bath as investors, but we appreciate your cautionary note here and your candor about all this, Jack McCabe.
Thank you.
Great to see you, Jack.
Good seeing you too, John.
All right, more to come here on America's Forum. It's not too late to send in your comments. What do you think about the real estate market? Could we be in another real estate bubble? Are we headed for another real estate crash? Write in. Let us know how you feel about this issue. Find us on social media at NewsMax TV, the hashtag America's Forum. You can find us on email, connect@newsmaxtv.com, or on Facebook, facebook.com/NewsMaxTV.